Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 24th of September. Now last week we had quite a bit of volatility in the markets, mainly driven by political events such as the US and China trade rhetoric and imposing of those trade tariffs, which actually resulted in the US dollar and the yen significantly weakening throughout the course of the week. We then had the more news on sort of Brexit, on those negotiations and on the sort of proposed plan that the UK had put forward to Europe. And that created, again, a whole sort of seesaw price action here in sterling. So the market strengthening in value throughout the sort of beginning of the week, only to sort of give it all back sort of pretty sharply at the end. So let's take a look at some of the markets here that we focused on last week and the markets that we highlighted in the Markets to Watch newsletter. And we'll take a look at some of the markets that we're going to be focusing on in the trading room this week. So the first one here was dollar yen. We were looking for the dollar yen to be bullish here above 112, or above our 112 level. If I open this up, you can see it last week. We're looking for the market to break above 112 for this uptrend to continue. Well, it did continue, and the market sort of continued back up. Now, at the moment, the market's just sort of finding support here around our 112.50 level, and I still think this market has got more legs to continue as long as the US dollar can continue to strengthen. The next one that we were looking at last week was the NQs, was the Nasdaq here. Now we were looking for the Nasdaq to be sort of continue being bullish here off our sort of 75.50 area. Now the market didn't actually continue long above 75.50 at the time. It came back and it retested the 74.50 level. Now we've had this level marked in our charts for some time now, as you can see, and again, as indeed over the past sort of time, several times here that the market's tested these areas, it's found support and prices sort of continued. I still think that the Nasdaq here, it is the lagger out of the three US indices, the Dow Jones and the S&Ps. They're both breaking out to new highs. The Nasdaq is a little bit sort of lagging behind here. So again, I'm looking for continued bullish action here. My preference is still long here on the Nasdaq, and we've certainly got the 75.50 level where the market's sitting at the moment, and below that we've got this big 74.50 level. If 74.50 actually gets taken out and the market continues lower, then I think my opinion would change here, and I'll be looking for more lower price opportunities here. The third one that we focused on last week was actually CAD Swiss. So if we come and have a look at our CAD Swiss, we wanted to look at opportunities below 7,400. Now we did in actual fact get some trades here in the market when it broke 7,400 at this level here on the 4-hour chart. But as we can see that the market didn't continue for much further. So we managed to get a few successful trades in here, but the market is now sort of like turned around and it's sort of coming back down towards this sort of 7,400 area again. The trouble is at the moment is that price is now looking rather, or the trend structure here is looking rather mixed, with the market making new higher highs and looking rather sort of messy here on these higher time frames. So there are some other opportunities that we're keeping an eye on in the trading room this week. So let's come and have a look at some of these which may be of interest. The first one here on the metals. The metals are sort of broadly bullish at this moment in time, but a lot of the trend structures, if I sort of show you gold, a lot of the trend structures are looking extremely sort of difficult here and challenging to trade. Just very, very sort of choppy price action. But as long as the market here, like on gold, can hold above 1,200 or 1,200, this is looking again bullish here for precious metals. The market that I prefer the most out of them is platinum. Now platinum for me, we've got a structured uptrend here. As opposed to the likes of gold and silver, which were sort of very sideways and choppy. At least here in platinum, we've got a good structure. The market's sort of finding support If I open up this on the 4-hour chart, the market sort of like finding support here at this sort of key level where the market sort of found resistance at before. And we're in the structure here of a long trend with convergence. So for me, I think this market's sort of looking good up towards sort of 850, that sort of area. And at that point, we really then sort of get another decision point here as to whether the this sort of key 850 level that we can see on the weekly chart is going to hold. The next one, well, there's actually a couple here that are dollar-related markets. And I suppose the big question for a lot of traders at this moment in time is the dollar going to continue to slide, or is the value going to bounce and continue to take back the losses that it put in last week and strengthen? So there's a couple of markets here that I'll prefer in either direction. So the first one here is Kiwi Dollar. I like the Kiwi Dollar for a US dollar strength. So this one here, if we look at the weekly chart, we can see that this market has been in quite a strong short trend here for some time. Now we've got the market has rallied up here to back up into this sort of level at sort of 6,700 in the context of a downtrend, and it's also in the moving average zone here. We still have good sort of convergence to the short side. So if the market can it rejects this level, if it rejects higher prices breaking above 67, then I think there's only sort of one way really for this trend to continue, and that's to make new lows and to continue to the short side. So I prefer this market for short opportunities, but I'd need to see again the play here would be US dollar strength. So Kiwi weakness against a strong US dollar, and that will facilitate this market sort of rolling over and continue in its short trend. Now, on the flip side to that, we can come and have a look at markets like sterling. Sort of looking at sterling against the dollar, this is cable. Now, this market had been in a very, very strong bullish uptrend, as we can see. And sterling continues to sort of be rather sort of resilient to sort of negativity from the sort of Brexit negotiations that go on. It does have, it is affected by the sort of rhetoric that goes on, which we can see. But overall, the trend is still intact. So at the moment, sterling is back into, or cable I should say, is back into this sort of 130 level. It's finding support here, and there's certainly sort of a couple of levels around here where the market needs to break significantly in order for this uptrend to fail. But at the moment, this is holding and it's intact. So for me at the moment, I'm preferring cable long, probably back here to 132 and then back on to sort of 133. If we just think about the structure of the trend, it's got to get above 133 for this to trend to continue to be intact. So preferring sort of a cable Great British Pound against the US dollar here, again for long opportunities. Even when we come and take a look at other sterling markets at the moment, sterling is putting in some strength today, but again, that is on the back of a big sell-off at the tail end of last week. If we have a look here at the likes of Great British Pound against the yen, again, this market has sort of fallen back to very key levels here on the daily, and it's finding support there. So 147 is a very key level on this market. Again, it's in the structure here of a long trend. Market's finding support there, and it also just sort of tests the 10-period moving average as well. So again, if this market sort of continues to continues long, we could be looking for that sort of 150 level for prices, for prices to hit for this long trend to continue. So there's a few markets there that I'm keeping a close eye on for trading opportunities in the trading room. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.